Hello everyone and welcome back to the course. Let us continue with module number 10, that is index options. Nifty and Bank Nifty weekly options are India's most liquid, most traded, most analyzed instruments. Everything we have learned comes together here. Let me show you how to use this market intelligently. India pioneered weekly options expiry, and it has created a unique ecosystem. Options that cost 200 rupees on Monday can be worth 5 rupees by Thursday if Nifty does not move as expected. Theta decay is relentless in weekly options. Open interest analysis becomes your most powerful tool. The strike with highest call OI is where the market is capped for that expiry. Institutional option writers will defend this level aggressively. The strike with highest put OI is where the market is floored. These levels define your weekly trading range. PCR, put call ratio, tells you overall sentiment. PCR above 1.2 means too much put buying, a contrarian buy signal. PCR below 0.7 means too much call buying, contrarian sell signal. Max pain is the strike where option buyers collectively lose the most money at expiry. Market prices tend to gravitate toward max pain in the final hours of expiry due to institutional delta hedging. Check max pain every Thursday morning for Nifty. If Nifty is 150 points away from max pain with 3 hours to go, expect gravitational pull. At opstradesai.com. Max Pain Calculator, OI change charts, PCR trends, payoff diagrams. All free. One of the most comprehensive options analysis platforms in India. Third is Sensible. Visual option chain, strategy builder, IV rank analysis, freemium paid plan at approximately 999 rupees per month for advanced features. Fourth one is TradingView for chart analysis before FNO trades. Free plan is sufficient for most traders. Fifth is Zerodha Span Calculator at zerodha.com or Margin Calculator. Always calculate required margin before placing any trade. Do not discover the margin requirement after you have entered the position. Last is India Wix. Check daily on NSE website. Takes 5 seconds. Tells you whether to be a buyer or seller of options today. The most important module in the entire course is risk management in FNO, which is module number 11. Risk management in FNO. I said earlier that 89% of FNO traders lose money. I am going to tell you exactly why and give you the rules that put you in the 11% who succeed. This module is more important than all the strategies combined. 6 rules, not guidelines, not suggestions, non-negotiable rules. Rule number 1 is FNO capital must be Rule number 1 is FNO capital must be no more than 20% of your total investment portfolio. Keep 80% in safer assets, mutual funds, equity, FD. FNO is your high risk, high return bucket. Never miss it with your wealth building capital. Rule number 2 is maximum 5% of your FNO capital at risk on any single trade. If your FNO capital is 5 lakh rupees, maximum risk per trade is 25,000 rupees. Even 10 consecutive losses only takes you down 50%. You survive, you learn, you recover. Rule number 3 is total margin used must never exceed 50% of your FNO capital. Keep 50% as free cash for margin calls, opportunities, and emergencies. An account at 100% margin utilization is one bad day from a forced exit. Rule number 4. Define your stop loss before entering every trade. Place the stop loss order before you place the entry order. Remove emotion from the exit decision completely. If you are in a trade and you have not defined your stop loss, you do not have a trading plan. You are gambling. Rule number 5. Monthly loss limit equals 15% of FNO capital. If you lose 15% in a month, stop trading. Review everything. What went wrong? What rule did you break? Come back next month with a refined plan. No revenge trading ever. Rule number 6. Profit target equals 3 times the monthly loss limit. If maximum monthly loss is 15%, target is 45% monthly gain. Good months more than offset bad ones. Consistency compounds. Every trader who has blown up an FNO account broke at least 3 of these 6 rules. This is not theory. This is documented pattern across thousands of accounts. Follow these rules and you join the minority that succeeds. Hedging your portfolio. The most powerful use of FNO for most investors is not speculation. It is portfolio protection. Here are 3 hedging strategies every equity investor should know. First is protective put. You own equity worth 15 lakh rupees. Buy one Nifty put lot at approximately 9,750 rupees. If Nifty falls 10%, your put gains 1 to 1.5 lakh, significantly offsetting the equity loss. Your insurance costs less than 1% of portfolio value, like life insurance. You pay a small premium for protection. Second is collar strategy. Own stock, sell OTM call, use the call premium to buy OTM put. Net cost is near zero. The premium received from the call offsets the put cost. Protected from downside below the put strike. Upside capped at the call strike. Zero cost hedge. Third is Nifty Futures hedge. Own 30 lakh rupees of equity portfolio. Sell 2 Nifty Futures lots, approximately 15 lakh each. If market falls 10%, portfolio loses 3 lakh, but short futures gain 3 lakh. Delta neutral hedge. This is exactly how large institutional investors protect portfolios. Exit the hedge when the correction passes. 8 mistakes that cause 90% of FNO account blowups. Learn these. Do not become a statistic. First, over leveraging. Using 80 to 100% of capital in margin. One bad day wipes the account. Number 2, no stop loss. I will wait for it to come back. It usually does not. Number 3, buying deep OTM options hoping for a jackpot. 90% expire worthless. Number 4, selling options without understanding maximum loss. Always calculate worst case before selling. 5, revenge trading after a loss. Setting a daily loss limit and then counting after hitting it. Number 6, not understanding theta before buying. Calculate daily time decay before buying any option. Can you afford 7 days of decay? Number 7, trading FNO with money needed for life expenses like rent, education, health, etc. Never. Number 8, copying Telegram group trades. No one shares genuinely profitable trades for free. These groups are either wrong or are exit signals for their own positions. Let us build your complete FNO operating framework in module number 12, that is FNO Trading Plan. Everything in this course has built towards this movement. We are going to put all the tools, all the rules, and all the strategies into one systematic framework that you can execute consistently every week. Professional FNO traders follow a strict daily routine. Here is yours. 8 to 9 a.m. pre-market intelligence. Check SGX Nifty, your best indicator of the opening gap. Check Dow Jones and Nasdaq closes. Check India VIX pre-market reading. Read any overnight news. Review yesterday's trade in your journal. 9 to 9:15 a.m. Preparation. Open NSE option chain. Note max pain level. Identify top call OI strike resistance. Top put OI strike is support. Set up your charts on TradingView. From 9:15 to 9:45 a.m. Observation only. Do not trade the first 30 minutes unless you are experienced. Let initial volatility settle. Watch which direction the market is establishing. Identify the day's character, trending or range bound. 9:45 a.m. to 1:30 p.m. Prime trading window. Execute setups that pass your complete checklist. Maximum 2 to 3 trades. Enter stop loss immediately after every entry. Monitor but resist adjusting constantly. 1:30 to 3:30 p.m. Management and exits. Review open positions. Open expiry day. Square off all options by 3 p.m. Never hold to the final 30 minutes on expiry day. 3:30 to 4 p.m. Post-market journal. Log every trade. Entry price, exit price, reason, P&L, emotions, lesson learned. No journal entry, no improvement. Simple equation. FNO trade entry checklist. 7 questions. All 7 must be answered yes before entering any FNO trade. Number 1 is, Is the weekly chart trend aligned with my trade direction? Second question, is India VIX appropriate for my strategy? Below 16 for buying, above 14 for selling. Third, have I selected the right strike, ATM or near OTM for buying, OTM with delta 0.15 to 0.25 for selling? Question number 4. Does the expiry have sufficient time, at least 7 days for option buying? Number 5. Is my stop loss calculated and the order entered? Question number 6. Is my position size within 5% risk of my FNO capital? Question number 7. Are there any major events in the next 24 hours like RBI, budget, expiry, earnings? 7 out of 7. Enter with full conviction. 6 out of 7. Consider half size. Below 6. Skip the trade. No exceptions. This checklist will prevent 80% of your worst trades. The trades you do not take are often as important as the ones you do. Four-phase learning roadmap. Here is the honest, realistic roadmap to becoming a consistently profitable FNO trader. No shortcuts, no hacks. Phase number 1. Paper trade for 3 months. Complete this course. Paper trade weekly, Nifty options only. Every trade on paper uses the full checklist. Log every paper trade. Do not risk real money in this phase. 2. Micro capital. Months 3 to 6. Start with 50,000 rupees of real capital. Option buying only. No selling. Maximum 1 lot Nifty per trade. Goal, do not lose more than 15,000 rupees total in this phase. Capital preservation is success. Phase number 3. System building. Months 6 to 12. Start including covered calls and iron contours. Increase capital to 2 to 3 lakhs. Journal every trade without exception. Evaluate your system monthly. Goal, 3 profitable months out of 4. Phase number 4 is scale. Year 2 and beyond. After 12 months of positive results, increase capital, add bank nifty. Refine your system based on 12 months of journal data. Only scale what is working. Never scale a losing system hoping it improves. The traders who make consistent money in FNO are not the most intelligent people. They are the most disciplined. They follow their rules when it is uncomfortable. They exit losing trades when every instinct says wait. They take profits systematically when emotion says let it run. Discipline is the only real edge in FNO trading. You have completed FNO Foundation's course number 4 of Fintamin Financial Education series. Let me summarize what you know now. You understand what derivatives are and why they were invented. You know the FNO ecosystem, lots, margins, expiry calendars. You can calculate futures, P&L and understand MTM settlement. You know the difference between calls and puts and when to use each. You understand option premium, intrinsic value, time value and implied volatility. You know the 4 Greeks, delta, gamma, theta and vega, and how each affects your position. You can execute long calls, long puts, covered calls, bull call spreads, straddles, and iron condors. You understand how to read the NSE option chain. And most importantly, you have a complete risk management framework and a 7-point trade entry checklist. This knowledge puts you ahead of 95% of people currently trading FNO in India. But knowledge without application is useless. Your next step: paper trade for 3 months using the framework from module number 12. Course number 6 is Institutional Trading Framework. Is the advanced course. VWAP, Max Payne, Gamma Squeeze, OI Analysis, Smart Money Concepts, Wyckoff Method. It is designed for traders who have completed this FNO Foundation course. I request all the viewers of this course to please subscribe to stay updated with latest. I request all the viewers to please subscribe to stay updated with latest educational videos and visit fintamin.in for more insightful knowledge on stock markets and financial planning. I am your financial guide from Fintamin. Our mission is to democratize financial planning for every working professional in India. Thank you for your trust and your time. See you in the next course.